Coin traders, what is going on? Got Algorand pulled up, so welcome and shout out to Algo fam, ALGO on that ticker. Got a few things to talk about today. Specifically want to look at the 12-hour and daily charts, so a little still stuck in that type of format. Longer term charts are still very much applicable. A lot to talk about today, and a few days ago I actually made a tweet over on Twitter or X about the big zone that we would actually probably see resistance at, but if we do smash through it and maintain that, then that's going to be a lot of good upward directional sign for the growth and future potential of Algorand. So going to be talking about this today and how we kind of barely broke it, but then obviously switched and flipped back down below it since we are below the 10-cent psychological right now. So yeah, if you are on Twitter or X and not following me currently, definitely drop me a follow at coin_trades is the handle over there. Join the conversations. Just hit 5,000 followers today, so thank you to everyone so far. Okay, so starting off looking at this daily and the specific thing that we are looking at right now, and I know we talk about exponential moving averages, and obviously we are still maintaining closing level of support on top of this 26, which is still obviously a very good sign. But the thing that's really great about the current setup right now for the daily in regards to these exponential moving averages is just how tight and close they are together. So for example, from the 50 down to the 26, we're really only looking at less than 2%, about 1.25% of a gap so far compared to even, for example, if we go back to the gap that we had most recently closed was still almost 4%. So still a very nice opportunity for the bulls to actually start to continue to see a little bit more upside pressure, flip these and actually have a nice full flip for the bullish direction, which would mean that the price of least resistance, or the path of least resistance rather, is going to be to the upside. So we are going to expect a little bit more speculation that we could see that ultimately end up playing out. But we do know that since we are starting to see a little bit of slippage, that's why we actually need to see this 26 period hold up so much, and specifically above the 980 price level, because as we saw, previous levels of resistance do flip to previous levels of support. So that's why we need to see between the 26 right now and down to the 980, a big zone of support, ideally, which would find a pretty big buffer, especially since we are seeing trend highs come in, higher highs, now setting higher lows. So we don't want to go too much lower, because we would be then at risk of ultimately changing the trend. So if we actually look at a Fibonacci retracement right now, we are looking at the price level support coming in right above that. So we have 980, the 61.8 is going to come in right around 9.99, just below that. So right around the same level as the 26 currently. So if we can maintain support on top of the 26, the 61.8% retracement, and then obviously well above the 9.8% level, that would be the extremely strong target to the downside that we would like to see to ultimately start to bottom out before retracing and testing some of the highs here, because we do want to see prices getting back above that 10-cent psychological. All right, so zooming out now to talk about this big major zone. So this has been a very big target for us ever since getting into the middle of it. So essentially we're drawing it from the level of closing support previously about 1057 down to about the 9.8 cent level. And you might be questioning why necessarily that level. Well, if we actually flip over into the 2-day, then this is pretty much the apparent level that we have, where we had weeks and weeks and weeks of just big level of closing resistance. So because it has been the most significant week after week and a very clearly defined line, we know that that is a very relevant level of resistance, which should now hopefully be that support, especially since prices have been getting in this overall resistive zone. So on the same note, you can see that we did find prices breaking above and closing above, but easy come, easy go, and obviously now retracing, but still maintaining support in this overall zone. So if we can see longer levels of support still maintained in this overall zone, and ideally above the 10-cent psychological, drawing a price line for that right now, then that would end up being a pretty good scenario to find a little bit of consolidation inside this zone, once again confirming it as a very strong resistive zone, because when we do actually retrace, that does mean support. And the longer something does become support, the more we can confirm that upside direction will follow, especially after finding our low and our bottom. Now, I do want to talk about this bottom really quick, just because it has a little bit of patterns and similarities to a typical double bottom. So if we look at the overall initial test, very quick, steep test, initial bounce and rejection before finally finding a little bit more slower, prolonged test and price movement to see another retest of that overall support level, pretty much down at 8.74 cents. So looking at a pretty quick and nice test of this double bottom, and especially now breaking through a very strong resistance line, as long as we can still maintain this over the coming days, that is going to be one of the very strong, nice signs that we are looking for to think that prolonged and the next move is upside, especially after finding a double bottom, breaking big levels of previous resistance to confirm it as support, and then consolidating in a very resistive zone. So now even on the 2-day, you can see that the exponential moving averages between the 50 and the 12 are still getting very tight together. So even on this 2-day chart, still looking at a gap of about 10% right now, which is the lowest that we have seen since back in April, where we were looking at about 4.5%. So the main thing that's significant about this exponential moving average 2 right now, and let's actually go ahead and clear up this chart just so we can focus specifically on the exponential moving averages, is just how we actually haven't seen prices getting above this 26-period exponential moving average since we did have our high and our fake out breakout back in the middle of April. So coming off of an algo kit announcement, that's when we saw a little bit of this optimistic pattern playing out where ultimately we just flushed and completely rejected on the longer term. And then once that happened, did confirm the 12 as well as the 26 as a big resistance zone. So that's why on the current candle right now, or the current setup rather, since we have broken above this 26-period exponential moving average and maintained it for a couple of days as support, we could still see, since we have about a day left, of being able to flip if we do see strong upside. So 26 is at currently 10.05 cents. If prices do get back above that for the close, then we would see a very nice close for 3 2-day candles consecutively, especially after confirming it for 3 consecutive candles as a point of resistance. So that would mean that we would be seeing a price test of this zone between the 26 and the 50-period exponential moving average, which, like we said, zooming out, hasn't happened since the middle of April. Okay, so revisiting the 4-day chart right now, just to talk about a couple resistance points up overhead. First, want to look at the level of closing resistance, which is kind of found in that zone that we talked about, but then also up to the 26-period EMA right now. So prices for those are 10.59 and 11.04, and those are in cents. So if we turn that into a zone looking left, big points of basically clear rejection from this overall zone on the initial move before finding that flush back in the middle of August. But now do have to zoom in and talk about this 12-period exponential moving average. So actually going to hide the 26 and 50 for now, because if we actually go ahead and let's go ahead and remove this as well. If we look at these exponential moving averages, big points of resistance, resistance, and resistance. Meanwhile, we did have resistance, finally got a bullish candle to close above. So we are now looking for the next almost 3 days, about 2 days and 23 hours as of time of recording till that 4-day candle closes. So we could still see above 9.96 cents, a very strong close, which would be maintaining this level as support once this candle showed that confirmation signal. So now that we are getting that back test, what we can hope for is prices to rally, which would create a nice long lower shadow below this support line, which is a very strong and clear sign, especially if there is a little bit of continued follow through over the next few candles. Now, I do want to look at volume here really quick, because we can see over the last 4 bullish candles, it's not necessarily the most significant uptrend, but if we actually look at the overall volume, you can see more or less an uptrend in increasing a bullish volume, with the bearish candle that just closed a day and a half ago or so, or just over a day ago, coming in with not necessarily that much bearish volume at all over this 4-day period. So if we continue to see over the next few candles decreasing a bearish volume, or if this does flip bullish, increasing a bullish volume as well, then that would be that sign of strength and follow through that we are going to be looking for when we talk about these support defenses. Some people over on Twitter or X are talking about how, since it is the sign-up period right now for the next governance period, that there might still be an opportunity to see a little bit more buying as well. Personally, I don't think that's extremely likely right now, and anyone who has been in is likely going to have already maxed out. But nonetheless, it could still be a reason and catalyst to see a little bit more buying pressure coming in than typical, but it's not something that I would rely heavily on in terms of an upside move. Okay, so I want to actually go into the Algo Bitcoin pairing here, and I know I do forget to cover this chart and kind of neglect it sometimes, so appreciate all the feedback and reminders to go ahead and look at that once again, because I think there's a lot of things important to actually go ahead and look at here. So right now, one of the biggest things is that we have had the exponential moving averages get an increasing gap between all 3 of them. And now we know that when the gap increases, that does mean that at some point they do need to tighten back up again. But if we actually look at what we experienced from back in the December to middle of February range or so, we actually had a pullback. The gap increased on the exponential moving average, a flag pattern that did kick off the 12-period exponential moving average before finally finding downside movement. But because we have been in this constant downtrend since the middle of February, to actually see now a longer term support get established at about 356 Satoshis, and now also in addition a run up in not quite a full test, but we do know that we're getting very close to this 12-period exponential moving average, especially if this 356 support line for 356 Satoshi line does continue to provide support, since it has been since the start of June. This could be our level of accumulation that we're actually eyeballing for a little bit more of that longer term support. Now, if I actually flip out of the logarithmic scale into a linear scale, then I do want to go ahead and blow up the current scenario, because we can see a very clear trend line and also price level resistance below the 400 Satoshi level. And especially now that we are getting stuck below the 12-period EMA as well. That's another reason why this 356 Satoshi line needs to provide support, as it is getting tested once again right now. So that's going to be one of the last signs whether or not we can actually maintain and stay flat, or try to get a little bit more upside bounce. Realistically, my expectations aren't really that high right now for this chart to keep holding up. Now, that doesn't mean that the price itself of algo won't go down, or won't go up, excuse me, but just compared to the Bitcoin pairing itself. So that means algo with respect to Bitcoin isn't necessarily going to be as strong and holding up quite like it is. And that's kind of why we have been in just a longer, very steep downtrend for this overall algo to Bitcoin pairing chart. Flipping over to the 12-hour really quick before we wrap up, just to look at the current inside bar pattern that is happening, still maintaining closing support on top of the 50-period EMA here. So still a good sign, having flipped fully bullish in terms of exponential moving averages on this overall 12-hour chart, because we actually haven't had a full bullish flip on this exponential moving average chart for the 12-hour. Since we actually had prices back in the middle of May when we were looking better on some of the other timeframes as well in terms of exponential moving average tests. So again, another good sign in terms of exponential moving averages. And so obviously with a little bit more bearish volume stepped in, as we can see on the bottom, we're still looking at inside bars though. So every follow-on bar is fitting within the price range of the previous bar. So this is a little bit of a sign of that consolidation. And as long as we keep seeing these long lower shadows on top of this 50-period EMA, that does give it a little bit of hope to the bulls to be able to maintain this level of support. But otherwise, we are still going to be running down to about the 9.8 cent level, which is one of the critical levels of that zone that we did want to find support in. If we do lose that, then we would actually be running down to the low, so about 4.66%, until we actually need to maintain 9.34 cents in order to maintain a higher low for the price. But if things actually do get that far down, especially after finding such a nice big break and a new higher high for this trend, that's pretty much going to mean a lower high coming in at that point, in which the best case scenario would actually be setting a higher low combined with another lower high. 9.4 is still going to be another very strong level of support, but obviously not as good and critical as 9.8 would be. So hopefully the algo bulls can be able to maintain 9.8 cents as that longer term level of support coming up right now on this 12-hour chart. All right, Algo fam, well, that is going to go ahead and wrap it up. Definitely let me know your comments, questions, and all that stuff down below in the section, and I would love to get back to each and every one of you. I'm going to be heading out of town here for a few days for a friend's wedding, so probably not going to be getting another video out until about Monday or Tuesday of next week. But nonetheless, do appreciate all the continued love and support. It definitely means so much, and I really appreciate it. That does wrap it up for now, though, so stay safe, take care, and I will catch you all back in the next video.